Are you an entrepreneur, an aspiring entrepreneur? I want you to join me on my new video series talking about the Entrepreneur's Accounting Toolbox. I'm Irfan Ali Moladina, the entrepreneurial accountant and managing partner at RMI LLP. Today I'm going to cover our first video, which is just going to go over some of the accounting basics for business owners. So first, let me introduce you. What is accounting? Well, accounting is the day-to-day record keeping and processing of your transactions and managing the activity that actually occurs from a financial element in your company. So some of the few things that I want to touch on is why is accounting important for business owners? Well, most importantly, it helps you manage your company. Okay, so what does this mean is how are you supposed to really look and see the financial implications on your day-to-day activities unless you're doing good accounting and good record keeping? So biggest thing about accounting is without it, you're not going to be able to manage your business as easily, and you're not going to be able to tell what's working, what's not, and how successful things are. Another big factor of why accounting is so important for a business owner is you need it for tax preparation. Without actually knowing the financial results of your company, you're not able to file a tax return, which is a requirement of all governments. And so being able to actually file your tax return accurately, if you ever get audited, to have the backup and support that you need, all of that is the foundation of that is good accounting and record keeping. And the third most important reason why accounting is so important for business owners, well, that's simply because banks and lenders and investors all require this information. If you ever needed to obtain any type of loan, funding, if you wanted to look for investors, if you want to grow your business from that element, you're going to need to provide them with some good, accurate financial records and show that you're actually managing your business from a good financial standpoint and good strength on the financial side. So today, because this is the introduction to accounting for business owners, I just want to cover some basic concepts. And I'll be talking a lot about this. I've talked about this in my other videos, and in this entire video series, you'll hear a lot of these concepts. So I think now is a good time to define some of them. So the first one is revenue. So revenue is actually every dollar that comes into your business from a sales standpoint. A lot of people get confused between revenue and income. So think of revenue as your actual money, that any sales you have, any money that comes in. We call this your top line dollar. Okay. Now income is actually your bottom line dollar, and what that means is you're going to take your revenue less all your expenses that you incur, and that's going to give you a total for what we call your income. And sometimes this could even be a loss if you're running in a negative position. So again, revenue is our top line. You're going to have your expenses, and your bottom line is going to be that income number there. So the next one is profit. That's another common word. Well, that's the same as income at the end of the day. So when we're looking at what your profit is in a business, some people say, well, what is your net income? What is your profit? The next one is record keeping. So when we're talking about record keeping, well, what does that mean? That means the day-to-day transactions that are being kept up to date. So a lot of times you'll hear things like different softwares being used. Well, what's nice about this is you can actually do record keeping manually, which many people used to do, or you can use Excel, for example, or you can use some of the softwares out there, which I'll touch on in a minute. But record keeping at the end of the day is making sure that every transaction that goes through your bank account, every expense that you pay for, every sale that you make is actually accurately kept up to date on a regular basis. Another big one is financial reports, and I want to just touch on some of these different financial reports that you might hear names of. So things like, what is a balance sheet? And so the balance sheet is always at a point in time. And so what's important to remember about a balance sheet is people might have a year end in their business of December 31st. And so when we're looking at a balance sheet, we're looking at what your cash balance is on that day. We're looking at what your investment into the company is on that day. We're looking at the loan balances on that very day. The very next day, many of those numbers might change in your business, right? And so balance sheet is always looking at what assets and liabilities and equity you have in your company on a very specific day. The next one is your income statement. Income statement is over a period of time. And so when we look at it, many times you're looking at it on a monthly or an annual basis. If your year ends December, you might say, okay, what's my income statement look like from January to December? And that report is going to talk about, again, your income for the year or your revenue that came in, less all your expenses, and then your net income or profit at the end of the day. The next financial statement I'll touch on is called your cash flow statement. And so your cash flow statement, what that does is it breaks out your operating activities, your investing activities, and your financing activities in a business, and it talks specifically from a cash standpoint. So sometimes you might have things that are non-cash related, things like amortization or depreciation, or even sometimes when you look at accounts receivable, you're not getting necessarily cash into the bank when you make a sale. It could be a receivable. And so your cash flow looks at your actual cash transactions and the activity on those. So going back to some additional basic topics on accounting, there's a big difference between one very important factor, and that's cash basis accounting versus accrual basis accounting. And so what's the difference? So cash basis accounting is basically money into your bank, money out. Okay, you just heard me talk about a concept of accounts receivable. Well, let's look at that as an example. When I make a sale and somebody doesn't pay me right away, they might pay me a month later. If I'm doing cash basis record keeping, I don't record the sale until the money actually comes into the bank account, and that's cash basis. Well, the other one's accrual basis. An accrual basis is recording it when the transaction actually occurs. So when I make a sale and I have receivables, I would record the sale at the time the sale happens, and I have this account called accounts receivable, and when I get paid, then my accounts receivable gets cleared out and I get the cash into the bank. And so accrual accounting can be a bit more complex than cash accounting, but it's very important to know the difference, because most of tax filings for corporations and businesses, most financial reporting is all done on an accrual basis for accounting, never on actual cash basis. So before I wrap up this video, a couple more things I want to touch on, and that is some common accounting softwares. And so what's some really good softwares that people can use for their day-to-day record keeping? You've heard me in the past, things like QuickBooks, FreshBooks, Xero, Sage, all are very common tools that people use on their day-to-day record keeping, and very good tools and things to check out. All of them have different advantages, disadvantages, so they're worth checking out to make sure that you're taking care of your accounting on a regular basis. And then the last thing is just to touch on a couple tips and the most important things to think about when actually starting your journey as a business owner on the accounting side. And that is start early and do it often. That's probably the biggest and best advice on this side. And the reason you want to start early is if you can create a good foundation and have good financial reporting metrics and good record keeping from day one, when your business grows, you're going to be keeping those same habits in place. And that's going to take you a long way for sure in your business. And then do it often. And the reason for that is when you do your record keeping on a regular basis, it makes life so much easier. It's funny how many business owners I'll talk to, and it's like, what was this $10,000 or $100,000 transaction from 3, 4, 5 months ago? And it's hard to remember these things. And so even though they're big transactions, they're very difficult to remember what happened. Now imagine small ones that are occurring on a regular basis all the time. So if you can do your record keeping very often, then you're going to have a higher chance of being able to allocate it to proper accounts. You're going to have your books organized. If CRA needs to see anything, you'll be able to showcase it to them. So again, start early and do it often. Biggest and best advice on the accounting side. Once again, I'm Irfan Ali Moladina, managing partner at RMI. And if you ever have any questions on any of the topics I chat about or anything else in the accounting field, always feel free to reach out. Thank you.